Hey, what's going on, everybody? Today, I'm going to talk to you about how to get the best mortgage rates when you're looking to purchase or refinance a home. Look, let's face it, getting the best mortgage rates, it's a critical factor in determining the cost of borrowing and your monthly mortgage payment. So let's go ahead and dissect mortgage interest rates, understand how they work, and how you can get the best one. First of all, what are mortgage interest rates? So mortgage rates are the percentage charged by lenders on the amount borrowed for a home purchase or a refinance. Now, a lot of people get this wrong. They think that the interest rates are only based on the credit scores, but that's not necessarily true. So interest rates can change based on several factors, and I'm going to tell you the most important ones that influence them. Now, the first one is economic factors. So mortgage interest rates are influenced by broader economic factors like inflation, economic growth, the Federal Reserve's monetary policies, etc. So when the economy is thriving, it's doing really good, interest rates tend to rise. And then when it faces some challenges, then rates might actually decrease. This is the same reason as to why when there is a recessional period in the economy, interest rates tend to go down. Now, right now, you may see that interest rates are probably higher than what they've been in the last few years. This is due to the fact that we're living a pretty high inflationary period, and that we're facing in this country and obviously pretty much across the world. And the Federal Reserve policy to hike interest rates to slow down inflation. Now, the second factor is due to what we call loan-specific factors. So things like your personal financial profile and the specific loan details also affect the interest rates that are going to be offered. And lenders consider factors like your credit scores, your debt-to-income ratio, your loan term, your loan amount, and the type of loan program that you choose. Now, all programs come with their own guidelines and requirements, and each program has a unique eligibility criteria that may offer different interest rates. So what you want to do is when you're shopping around for your home loan or you're just trying to get even pre-approved, you want to make sure that you explore each program that you qualify for closely, because a program with a low interest rate might not be as beneficial as it seems to be. The best thing to do this is with a professional loan officer, your mortgage advisor, or a financial advisor, and compare the programs that you may be able to qualify for. It is important to do this because they all offer different interest rates. Now, other things like your loan term and your loan amount, and even the state where you are, is also going to influence interest rates. Actually, interest rates might be higher in different states than others. So that's another thing. So likewise, the term of your loan and the amount that you borrow is also going to impact your interest rate. So typically, shorter loan terms and smaller loan amounts might have lower interest rates. For example, a 15-year mortgage is going to have a lower interest rate than a 30-year loan. Why is that? Because it is sort of like a trade-off. Now, for the lender, for example, so interest rates are basically risk. And lenders are going to give somebody who is going to pay off the loan faster a much lower interest rate because their risk is lower. They're only going to pay off the loan in 10 or 15 years versus somebody that is going to pay the loan off in 20, 30 years or more, right? So it makes sense for a lender to give a lower interest rate to somebody who's going to get into a lower term. Now, obviously, the payments on a lower term mortgage are going to be higher than if you were to go with a longer term mortgage. So when it comes to getting a mortgage loan, you also want to understand that there are a wide variety of interest rate options. So for example, mortgage loans may offer regular fixed interest rates for the duration of the term. It's basically the reason why the 30-year fixed mortgage is the most popular one, because it's a rate that is fixed for the whole entire term, never changes. However, adjustable rates and even interest-only rates might be available, although those options are not necessarily very popular nowadays. Now, remember one thing, that mortgage interest rates are not solely determined by one factor. They are influenced by a complex interplay of economic conditions, loan-specific factors, market forces, and really even the state where you live. Now, one last thing that I do want to point out in this video is that you can also, to get the best mortgage rates, you can also buy them down. It's what we call buying down with points or discount points. And discount points work by allowing the borrower to pay a fee upfront in exchange for a lower interest rate. For example, 1 point or 1% of the loan amount usually reduces the interest rate by about 0.25%. So by buying down points, you can reduce your overall mortgage cost over time because you're going to be paying less interest rate. Moreover, if you do plan on staying in your home for more than 5 or 7 years, buying down points might actually be a good move because you might actually break even on the initial investment or initial cost of you buying down into the lowest interest rate. So my last thoughts for you is when you're shopping around for the best mortgage rates, I wouldn't necessarily focus on the rate itself. You should look into all of the things. You should look into the additional fees and charges that the lenders may charge you. This is going to help you get a pretty good, accurate picture of your borrowing cost. So finally, how do you get the best mortgage rates? Well, the first thing that you want to do is you want to maintain a very strong credit profile by managing your debt responsibly and improving your credit scores. Look, guys, simply, you are not going to get the best interest rates if you have bad credit scores or okay credit scores. The best interest rates are going to come for people that have credit scores over 760. The second thing that you want to do is you want to shop around and compare multiple offers or find the most competitive interest rate. Or what you want to do is connect with a mortgage broker who is going to do the shopping around for you. Obviously, there are well over 10,000 different lenders in the country, and it is highly unreasonable that you're going to call every single one of them. You may just want to check with one or two lenders and compare what they have. Or you can go with a mortgage broker who has availability to different lenders and they can do the shopping around for you. Now, the other thing is that you want to consider locking in the interest rate when you find an offer that aligns with your financial goals and objectives. So it's not always about just the best interest rate. If you're refinancing a home, but you have an objective of maybe doing an addition to your home and it's extremely important to you, then consider that as a goal more than just when is the lowest interest rate going to be available. And then finally, what you want to do is you want to consider buying down points. Just like as I mentioned before, it is an upfront investment that is going to help you save more money over the long run. But you do want to make sure that you stay in the loan long enough so that you can actually enjoy the benefits of buying down points. So following these steps is going to help you get the best mortgage rates available. Just remember to do your research, compare your offers before you settle on a lender or a program. Now, my company, Andy's Mortgage LLC, we're mortgage brokers licensed in Florida and Georgia. If you are looking to get the best rate on a mortgage, whether you're buying a home or you're refinancing, just give us a call and we're going to help you find the right solution for you. Or we'll just let you know if you're already in a pretty good spot. Either ways, we'll be happy to talk to you. Thank you for watching. Hopefully you found this video very helpful, and I'll see you next time.